gentlemen are already being interrogated due to the lights. So, yes, so audience, we are just sending a small request for you to be gentle with us because anyhow we are feeling under the pressure here. Good morning, everyone. My name is Vedrana. I come from Colliers, from Croatia, and I got this privilege to actually wake you up together with my fellow panelists today on a very sexy topic. Marina has this virtue of granting few of us some of the most interesting topics due to the situation on macroeconomic, geopolitical scene and so on and so forth. I'm really happy to have this group here. Most of the gentlemen I just met, but I read about them. I'm certain you know them better than I do. So they need to prepare some surprises and things that we still don't know. I will not introduce them one by one. Behind them or behind us you can see who is sitting at the panel. We are in Greece, so we definitely want to cover the Greek market. We have a representative of a national bank, so therefore we will cover the topic of the trends in financing and then correlated values and valuations in hospitality on the local ground. But as well we will take a broader look on the Mediterranean and then as well European level. So allow me to kickstart. Of course, we are open for your questions at any point because this is a rather intimate gathering. At any point, you can raise your hand and let's make it a discussion and chat rather than ex cathedra panel discussion. So what I suggest is actually to start with Ioannis, with the National Bank. It sounds so...
Dobro jutro, kalimera.
Kalimera, thank you. It sounds so big and relevant to be representative of a national bank, especially in such a macroeconomic situation. So if you can give us a bit of a view, how does Greece function in the given circumstances, knowing what macroeconomic trends are, of course in the context of geopolitical and geoeconomical situation.
Thank you. Good morning, everybody.
We are starting with an easy question.
Well, for an economist, this is a question that you can start talking and never end. So, well, Greece, I could say that it's a decoupling story. What actually has happened during the last year was something that we have not been expecting at this extent that it happened. Everything is going well. Tourism is fantastic, has been fantastic, but not only that. I think we have seen exports going up. We expect a GDP increase on the high single-digit numbers. And it looks like we are an island in a sea which is full of turmoil. Of course, we are not indifferent to the pressures that we see around. The reason being that our customers are primarily coming from the EU. And this will definitely affect things going forward. But since we are in a hospitality forum, and since we are all thinking on the longer term, on the broader term, I think that things are not going to materially change from the things that we are currently experiencing. Of course, without knowing what are the political consequences of what is actually happening. Other than that, on the longer term, NBG and myself, in my humble opinion, I do not believe that things are going to be substantially different from what we have been experiencing for the last 5 years.
So it's been hard, it's going to continue to be hard and struggling, or you are more optimistic than that?
I'm more optimistic. Actually, I could discuss about a scenario which is a bit heretic. We are all expecting doomsday, an Armageddon. Now think after Christmas, if the Armageddon has not happened, and if we have been out doing our holidays and having some fun, and then realizing that all the things that we have been expecting, somehow we managed. This is the tipping point of expectations, and economics are half of it is expectation. So things might materially change. But this is not an insight, it's not a forecast, it's just a scenario that might materialize.
We are continuously living in crisis. So since Lehman Brothers, we are facing the crisis over crisis, and then with COVID we faced another type of the crisis. So are we now versed to tolerating the crisis and accepting the new circumstances? I mean, it's a question for the banker, of course, to answer.
To the Greek banker, though, which is, if someone for the last, I don't know, 15 years, I've been working for 25 years, in the last 15 years I'm in constant crisis. Going all around myself, the region, I've been working in 5 different countries in the region, and all the time in every country that I was visiting there was another problem to be solved. So yeah, in Greece I think we have been accustomed to dealing with crisis. I think we have done it successfully, although we played with fire. And this is the reason why I'm optimistic about this country especially, which again, as far as hospitality is concerned, I think has a lot of things to offer, to give more going down the road.
Okay, now to another perspective, but still in the bank, from EBRD, European Bank for Reconstruction and Development. How does it function in crisis, and whether the current, again, geopolitical, geoeconomical situation in context with increasing interest rates and everything that is going on the global market, not only in our region, how does it affect EBRD in the decision-making processes related to valuations, values, and as well financing of the projects that you are focusing on?
So I'll start with a step back because from the banking perspective, being in hospitality, you know that you finance a business that is prone to cyclicality effects. So the approach to hospitality financing does not really change because of instabilities. Of course, no one was able to predict 2 consecutive black swan crises happening back to back and having extreme impact on uncertainty as well as destabilizing supply and demand of the market. But this doesn't mean that the way banking approaches hospitality changes. Whether we have more appetite for financings in the future, we do, and it's natural when uncertainty goes down, more investments are happening and more appetite the banks have. Of course, we are in a period of various uncertainties, some of which are here to stay, like the increase in cost of debt and how this affects valuation. It's also an important consideration. But overall, we see the market functioning, always recalibrating structures in a sense that are reflective of the uncertainty in the market. From our side, having the ability to finance the sector across the capital structure, so from plain vanilla debt to equity, it gives us the benefit of being able to be more complementary to what its different market needs. And we see markets where we are more active in project financing, but in other countries where we are more active on capital market transactions, equity, etc., etc.
So if I hear it right, or I hear what I want to hear, is money is available, but you will be more cautious on granting the financing? It's
natural for the banking sector, where there is uncertainty in the sector, to become a bit more introvert. But uncertainties during the pandemic are very different to the uncertainties these days. Uncertainties these days can be somehow modeled, and you can apply lower leverage ratios, for example, for a shorter period of time until the market recovers or until the asset itself performs better. But it's easier to put it in perspective. And in that sense, I'm positive that the banking system will be willing to finance more the sector.
Živorad, all the right answers, huh? That we want to hear. Or it's still early, so they might be saying things that we want to hear. What is your comment on what we've heard and your perspective on, again, geopolitical, economical trends?
Well, first of all, good morning, everyone. And thanks for coming so early this morning to fill in this room. It feels great. I think Marina has done a tremendous job with a team from Zagreb to Belgrade, now to Athens, we hope we explore another city after this one. You know, I've been 25 years in the hospitality industry and then moved to real estate industry. We brought Sotheby's to Serbia and started doing quite a lot of different projects. I think the first conclusion that I get out of all of this is that mixed use definitely something that for banks and for the guys on the right-hand side, and we have a great developer also here for the hotels, sounds and looks much better. I think in our models that we're plugging it in, and of course we always say that paper you can put on paper anything and it holds. But I think that right now we see that interest rates obviously will be going up. When you have the interest rates going up for the owners, the one thing they really look for is IRR. And it's really about what is the initial return. And I think the bankers look obviously the same thing. And when you compare the standalone hotel to the mixed use, I think that you realize that you have probably almost double percentage in the Balkans. It's in the Western Europe, it's a bit different, but I think in the Balkans, right now we're working on 12 or 13 different projects. In Montenegro, Kolašin is big, Tivat is big. In Croatia, beautiful Istria is big. In Belgrade, there is about 1 million square meters of residential use that is being built now with the different investors. I think that it is also very important to understand for the bank standpoint how we can finance that ourselves. That it's not just equity, but that we looked up to equity ratio, and that we see what is the return that we're coming from the phases. So I think the phases, residential mix with the hotel, that will give much more comfort to the banks, better collaterals, I think, in general. And to finish with this first question, I think there are a couple challenges. First of all, we've been talking about all the time crisis. We have September 11th, we had Lehman Brothers crisis, we have COVID, now we have war. On the beginning of this war, everyone was looking what's going to happen next month, what's going to happen next month. But I think in general, everyone has a sense and feeling that unfortunately, this is not going to be finished anytime soon, although of course we would love that to happen. But we have to live with it and continue working. So procrastinating for the investors, it's not going to help. I think that prices of square meter in the residential units all over the Balkans exploded. But also the interest rates exploded. And for the construction companies, if you look at that side of the business, the cost of material is so much higher, so their yield is being lower. So when you put and shuffle all of that together, I think Balkans have a prospect. I think that the banking business now and 20 years ago from the experienced guys on the right is completely different. Before you would let money come in and then you would collect papers. Now you always have ECB, this one and that one, and there is always another paper missing and the risk and everything else because these are the rules. But I think what is most important in the Balkans are the permits. And when these guys look at what is happening in this part of the world, and I have to say that Serbia has done tremendous job in past 6 to 12 months with the permits, that we've been having much speedier system. This was something that was in the past delay, and we hope that there will be more and more permits so the investors can continue growing our industry.
Thank you. You actually touched base on developers' risks and what are they facing among all the crises that we mentioned, which is supply chain, prices in the construction material, and as well availability of the workforce. From Wyndham perspective, your comment on this generic and general view, and of course related to your focus on Mediterranean and Europe in general. How do you mitigate your risks, excuse me, in the given circumstances?
Good morning, everyone. I think for us, it's true that we watch the situation on regular basis, and it's difficult to predict a lot. And we basically try to support our managed hotel and franchise hotel as we could. We went through different crises, had to adapt our business towards them. And I think the real challenges for hotels that are open these days are, like you just mentioned, is the lack of resources in human capital. We see a lot these days, some worry regarding energy cost that goes high, and we see some other business that goes directly bust. We have a lot of points, I mean, in all countries where the energy bills are going really high, and it's really a big issue. And if the government is not doing something to support, then it's quite complicated, I would say, for the hotelier themselves. You have bakery shops that are closing directly because they cannot support that, because they cannot really pass the price to the end consumer. So you cannot buy a piece of bread at 24 euro to justify an increase on the invoice. So that's the worry we have. One of the points that was a question is which business will last or will be the best equipped to pass that. In our industry, I would say the budget sector is always the hotels that are more easy. You operate with less staff. It's new build, sometimes with great technology again in place. And also the mixed use of the residential component. We have created residence brand products that are doing extremely well sometimes because you can operate also efficiently with less staff, and that's the way. But we constantly look at way to support, way to mitigate, try to, in the local countries with our franchisee, to talk, to influence or on support. But it's true that it's a challenge these days, again.
Which countries or markets do you think are or might be the winners of this situation? Where do you see the least of the negative impact of all the trends that we've mentioned so far?
You know, we are active all over Europe. I'm in charge of all the development in Europe. We have developers, my colleagues are here in the room, and we are then specialized. We reduce again the territories. We have a lot of development in Greece here, in Turkey, in Romania also, but Balkans is also very interested. We have projects, people looking at developing resorts, mountain resorts, seaside resorts. So we are quite active also in Croatia, in Montenegro. I don't think that the country will be going out of that. Sometimes the government also need, and I think the people on my left, they know that if the government are playing smart in a certain way and supporting the different industries and trying to be agile with the situations, that will help.
I'm glad that we are squeezing the bankers in the middle. So, Ioannis, we've heard about the responsibility and the mechanisms that either the government or the institutions such as National Bank might impose or might offer to the market. What is going on in Greece, and what are the mechanisms that are either made available or will be made available, especially from the hospitality perspective?
Well, just not to have a confusion, it's National Bank of Greece, which is a commercial bank that I'm with. The institution is National Bank, which is a different thing, just for the audience to know. So I'm not talking on behalf of the institution of the National Bank. It's quite clear that the Greek government have, together with Brussels, have put in place a substantial remediation program, the famous RRF, Reconstruction and Resilience Fund, which is expected to bring investments in the country exceeding 60 billion euros, being leveraged with bank financing. All of this is open for the hospitality. Actually, my team is taking care of the first projects under this scheme. Of course, it's primarily addressed for greenfield operations. So if someone wants to build a new hotel, he can come to the bank, apply for the RRF, and with a quite swift, I might say, process, because we have seen it actually working, he can do what, practically? He can lock 50% of the cost of the project, including working capital, including marketing expenses, including soft costs in general, for an interest rate, a fixed interest rate, for the next 15 years.
And what interest rate?
And the interest rate is ranging from 0.35 as we speak, because this inevitably is going to go up, but we have some time in front of us with 0.35. And it can range up to 1.70 again as we speak. So this plan has been devised back in February. And at the beginning, we didn't think it was too brave. We thought that unless the project is big, it doesn't make any sense for you to get involved in what we expected to be a very bureaucratic kind of a situation. Now things have changed that fast, and it's money on the table. Nobody is doing anything in Greece as a greenfield operation outside of the RRF, as we call it. And I think it's a great opportunity. But again, it's for greenfield investments. So it doesn't really apply because, as Živorad said, it's quite tricky to do greenfield operations in our area of the world. So what is actually happening, we have seen it happening many times. We have financed with Vasić a project in Kos, a greenfield operation at the beginning. Then it has been sold to a fund, and now we are financing another fund, buying from the fund that originally bought. So this is how things are actually happening in Greece.
What is the time window for exhausting these funds granted from EU?
Very good question. I forgot to mention that. So at the time of the application, you lock the interest rate. The time that we sign the contract, you lock the interest rate. Then you have an availability period for consuming these funds up to 2026. So you have 3 years ahead. I forgot also to mention that another 30% of the investment is the commercial bank loan with commercial terms, and then is the 20% equity. Can I make a remark?
Yes,
because I heard Živorad said about interest rates exploding.
Now, there will be, yeah.
All of us have been working back in the 90s, right? Yeah. I recall from my early banking days then, Euribors at the level of 4% and me underwriting at 0.39. That was the lowest underwriting ticket I have done back these days. So it's a 4.5. We're talking at interest rates of approximately 5 as we talk. So margins at 2%, Euribors at 3%. I don't think it's something that we cannot tackle in this industry, especially with a time horizon of 10, 15 years.
We're going to raise that question to the gentleman on the sidelines. But going back to what Ioannis was saying, George, maybe question for you from EBRD perspective. Is it sustainable and resilient for the hospitality or any other, let's say, commercial real estate business to be granted the funds from the EU? So is it a recovery mechanism only for, covering the period vacuum zone or whatever? Or can we foresee that, maybe not from EBRD, but obviously you are on the source of the information, will the continuity of those rather either free of charge or cheap funds continue to be available? Because the time window up until 2026, in Croatia we have up until 2027, there's only limited thing you can do within 3 to 4 years, especially when it's sizable greenfield projects. So my question for George and Ioannis, and I would like to hear from the gentleman as well, is it something that the investors and developers and the bankers, of course, should rely their business plans and the future of hospitality business?
If I may start, if it is sustainable, if it affects the business, is dependent on where the business is today and where the one providing the subsidized funds wants the business, the sector to go. And it also depends on the form, because in the past we were seeing Greece benefiting the hospitality sector through cash subsidies. This is gradually changing towards tax exemptions and more recently through RRF funds for subsidized cost. I find it smart to tackle it this way, especially in periods where cost of debt increases for external reasons, because you align interest with the investor, plus you making the investment more resilient in the long run, which is important. Otherwise, if you provide the cash benefit in the beginning, you create distortions to the interest of the investor on how to approach it, because it doesn't care that much for the investment itself on the long run, but rather on the shorter term benefit.
Maybe a question for you, Christian. Are you, with your franchisees, are you working on taking those benefits? Are they at all eligible to take any grants provided by EU? Or would you support that kind of business modeling, financial modeling at all?
We would support that, of course. It's rare these days that we have new build, because I think people are looking at more conversion. So the team also from our end is looking at an existing hotel with or without a brand and then converting into one of our brand with sometimes major renovation. We are working with some funds active here, but not just here, but also in Portugal, that are offering golden visa, and for them their business model is totally different. They finance differently. They sometimes start to acquire property and start to sell, and then finance and acquire the property, renovate the property, and these people are quite active here. Sometimes it helps also to bring some value to distressed assets, and we have some good example in Portugal, but also here in Greece. But we saw that always. If I just give this example of the golden visa, they did an announcement here in Greece 2 weeks ago over a Saturday, and then it frees everything because they decided to change.
To double it.
To double it, and then for the companies that are selling this golden visa and have the rules, then it's finished. So we were in the middle of, or they were in the middle of acquiring hotel. We have visited here, and it stopped everything until they would have clarity. And it's the same in Portugal. Initially, they were buying only villas in Portugal, and now they changed the law and they are buying only hotels. So sometimes it's good, and sometimes it's bad for us. It's just we are always trying to find a way, let's say, as a franchisor or a manager, to support clients, to exchange, to make them aware of scheme that can help them. Of course, sometimes I would say the international know-how or a franchise agreement or a management agreement will support, I would say, the case of the documentations of the bank. So sometimes we are quite involved at an early stage, because they would need us, they would need our expertise, they would need the expertise of a feasibility company, a well-known feasibility company can justify what the banks would need. So yes.
I promise we're going to switch to topic of the value, so it's still left untackled. But before that, Živorad, maybe the same question for you. So have you exhausted any option on taking any grants? We've heard about the recovery fund in Croatia. We know that there is an availability from the NPOO, National Program of Reconstruction as well. So how do you even find it as an opportunity? Would you consider it, or did you consider it so far? And would you recommend it to any of the stakeholders in the hospitality business to exhaust the option?
I think, first of all, if you look at, I think we have to look at the region, in the entire region, what is happening. We start from Montenegro, for example. Their passport or golden visa has been on 250,000 as a super value to the investors. The problem that they faced for past 9 months was that the system did not work. So you buy the piece of real estate, but then the papers are not coming because there was transition in the government, and all the government services were completely stopped. Now that has moved, and suddenly for us as I work as a director of development for IAG, we've been seeing 5 or 6 projects in Montenegro. Again, what we talked from the beginning, so it's mixed residential with the hotels. I think hoteliers will have to be more flexible and aggressive. There is quite a lot of them in the room, and I think that the challenge is that if we want luxury, we want to remain managed, but there are because of the brand standards. But I think more and more owners want to go into franchise. They want to go into franchise because I've been on the other side as an area general manager. You have expats, you have high salaries, you have the packages. they have to order this or that because of the brand standards. Owners don't want that, and it makes sense. They need to look at it that side. But on the other hand, from the luxury standpoint, it's very important that we maintain the brand standards if we want our luxury lines from IAG and other hotels to remain what they are. So that's why we acquired Six Senses and Regent and went into all of that. I think when you look at, for example, Albania, and there are a couple of gentlemen here in the room that are doing Intercontinental Tirana, Crown Plaza, Durrës, and many others, I think Albania has tremendous opportunity. We know that the new Belgrade waterfront and Emar and is moving to Durrës and developing unbelievable project there. So I think that those two are examples of good ones. When you look at Croatia, for example, in my mind, we've been trying to make deals there for a very long time, but it's super closed and conservative. It's beautiful when you look at history and what the Croatian company's done. Probably when you look at Hotel Park, it's in Rovinj, it's probably one of the best, if not the best hotel in the entire region. And you know, Ante Vlahovic had the vision, and Maestrad has done a great job. You have all these hotels. But for us, for example, international companies, it's much more difficult to do it in Croatia. With Serbia, it's a different thing. Again, we went and have now in Belgrade 12 different brands. But when you compare, I think this is the key. When you compare the rates of 2018 and 19 and with the ones that are now in 2022, yes, they are higher. But when you look at the workforce and how difficult it is to find, the cost of the employees, and then utility bills, and everything else that is looking, owners are again realizing that the hotel EBITDA, which everyone looks, is shrinking. So we are creatively finding ways to charge different fees, and when you send our term sheet as a hotelier to the potential investor or the owner, for the ones that do not speak that language, it becomes complicated. Because it's not just the fixed and variable fee, but you have technical service fee and the HOTS and how you charge this and the reservation per room and all of it. And when you add or calculate, you look at the percentage of EBITDA, and I think for the owners, the most important is that they know what's the revenue share that they will be giving to us, rather than trying to get unfocused and unbalanced.
Tell me now, in this context, how do you defend the value then?
Yeah. Well, in my mind, there are two ways of defending the value. I think that the brand always gives the result. And when you look at the ADR, which in my mind is not as much as important as the RevPAR, but when you look at the ADR on the branded hotels is always much higher. The second thing is the bigger fish is eating the smaller. And I think we have seen that in the past. I mean, nothing against, but when you speak with Accor, you know, the guy has to open the brand book so that he can lay out all the 48 brands that exist there. I think that there is a huge difference between being focused on what you want to do from mid-scale to luxury. But I think everyone in this room, we have Marriott guys, Hyatt guys, IAG guys, Wyndham guys, and Accor, all of them. Everyone is doing the great job, and there is opportunity for everyone. The question becomes for the owners, who is really more flexible? But we also have to understand that we don't want to play the dumping policy, what's been happening in the Balkans in the past with the room rate. Now it's happening with the management companies and the owners. Everyone is saying, okay, well, I'll give you 0.5 less or 0.1, and that becomes the challenge. So again, the mixed use, we get on the table from IAG deals, so many of them, and the mixed use is definitely something that is dominant right now, because selling residential and putting that money into investment for the hotels works for the owners. The guys on the right obviously feel more comfortable and the banks feel better, and I spoke about that. And to finish, you know, with the current situation and everything that is happening right now and the war, it's not gonna end soon. I hope, I understood, I hope that interest rates can remain there. But we're plugging already 6% and 7% in our futures, and I'm sure the bankers will support that. Then you add the construction cost that's not going to go down and be any cheaper. And then you really talk about who's going to spend money. And when you looked at the guy who done amazing presentation yesterday from STR, you will realize that the luxury is exploding, and people that have money, they're continuing to spend no matter how much it costs. But when you come down to the budget and the mid-scale, it becomes challenging. Yeah.
Okay, then a round of question for the rest of the gentlemen related to the values. Where do you think the values of the hospitality properties will go in the given circumstances? So we close the loop, starting from the beginning to the end of the discussion with the valuations, and of course we'll have time for 1 or 2 questions from the audience. So maybe starting from you.
I mean, just to complement what Jos says, I think if you are a hotel operator with a certain number of brands, the value is the brand. I totally agree with the mixed-use component. We see a lot of development in the region with branded residence, with a hotel and residences, so the value is definitely there. We've seen it on, you can sell higher, faster with a brand, and because for the end consumer, it's perceptions of quality, of assurance of their own investment. So, and I think it's not, when you look at the big hotel groups, of course people look at the cost, but it's much more behind. So you're part of a system. If you are engaged as a franchisee, then you understand the system, you can participate, you have trainings that are there, state of the art, you have procurement. So there is a lot of things that people can tackle. It's not just the distributions at the end, but if you are very active, proactive, and try to really engage with the brand operator, you can get a lot of benefits. So it's not just...
And the value maintains, right?
Yes, it's all that, and I think it's you live something, you live about the brands. As mentioned, I think you need to have a lot of flexibility, because I think we are known in the market to be flexible in a good way, because already it starts from construction, but also in operations, not having rigid and stupid brand standard, but leaving the people to breathe their own market. But we want people to be engaged. People need to use the brand and challenge us in a good way, and try to maximize their returns on all the tools that are available. So the value is there for me.
Okay, George, your comment on the trends in values and valuations in hospitality?
More or less, I'll echo what the gentleman said. Maybe from my side, I think they are counter offsetting drivers in valuations these days. We mentioned earlier how the top line evolves, how the P&L performance overall is affected by inflation, by an increasing cost of debt. A lot will depend on the duration of the situation, because if we end up in macro environment in Europe where we see stagnation, this will affect, in the end of the day, the disposable income and then the travel budget of the main source market for our region. But at the same time, we see that because all this happening at the same time, investment decisions will be deferred or even cancelled. So supply of new product may reduce, and this will also affect valuation. So if I have to make a projection, I would say that we will not see huge swings on valuations. In terms of transaction activity, again, we see this happening these days, but this is a bit distorted because many of the transactions are those that were initiated a couple of years ago or last year. In the future, I would expect some slowdown, but different markets will react differently. So, for example, Greece is performing quite well because of consistent messaging during the pandemic and low supply. Albania is gonna go well, in my view, because a lot of investments are happening on infrastructure, and they are attracting also investors on the residential component, because the Albanian diaspora comes back to the country and wants to buy secondary homes or even primary homes. So there are markets that will react differently than others.
Ioannis, you want to close the loop?
Yeah, I honestly don't know, but I'm picking from George's last comment. I think it's a market-specific thing rather than a pan-European thing. I think what you mentioned before regarding the high-value properties, for sure they're going to go up. In Greece, high-value properties, hospitality properties, are primarily in Mykonos and Santorini. Customers of these two venues is primarily Americans. This year we had 8 direct daily flights from the States landing in Greece. It has exploded. With the dollar where it is, I only see things going up. By the way, during the last years, what we have seen is actually promoting properties to on the very high end of the spectrum, both residential in mixed uses as well as hotels, exactly for this reason. So I think there, the story is quite clear, but it's limited. It's a small portion. For middle-range properties, it's an issue because it's not only interest rates that you have to tackle, unemployment, energy, F&B prices. So it's more a discussion of CFADs available for debt service cash flows rather than anything else. But for me, coming from a country that we used to operate and create things with inflation rates at 25%, that was the 90s, and we have seen the previous generation being able to prosper under this situation, I don't think that these things are unmanageable. What is worrying me is whether the economy is going to hold. Because if recession hits in Europe, that will pose a lot of questions vis-à-vis valuations. But again, in regions, Albania, what I heard before, Greece as well, I think there is still a way to go higher in valuations.
I read this as an optimistic view on things. When it comes from the bankers, it's really something. So let me hear from the audience. Marina is waving. We have 1 minute left. One question. Is there any question? It could be a good sign that we covered everything, or it's a very bad sign that that we are boring. So
at least we have a full house, huh?
Yeah, we managed to attract the audience. So I guess no questions. I hope you enjoyed the panel. Thank you, gentlemen. For me, it was really interesting. I hope it was for the rest of the people in the room. Marina, thank you for the opportunity to raise this topic and to bring this wonderful gentleman to discuss this. Thank you once again, and enjoy the rest of the conference.